Hi everyone, today I want to make a quick video about why I'm bullish on Bitcoin. Essentially, this video is going to be more technical because I don't really understand Bitcoin's technology or fundamentals. And a lot of people talk about the Bitcoin cycles. I don't really believe in the Bitcoin cycles. So essentially, I want to start by saying that Bitcoin broke an all-time high recently. A lot of people are going to think it's too late. Historically, breaking an all-time high is bullish. As you can see, when it broke the 2017 high it put in 2022, it rallied 250-ish% in less than a year. That's good. It broke the high recently, so I'm expecting some sort of large rally. However, I wouldn't expect it to outpace the QQQs too much in terms of direction. So as you can see, Bitcoin peaked in 2021 for quite a large high, and that was in November. And if you look at QQQ, it also peaked in November 2021. QQQ bottomed in October 2022, and Bitcoin bottomed about a month after. So in terms of direction, it's pretty similar, magnitude a bit different, but I'm bullish on the market, so it makes sense that I'd be bullish on Bitcoin too. Essentially, as everybody knows, Bitcoin ETFs were recently approved, so we're seeing a lot of volume into these ETFs. A lot of people are getting Bitcoin exposure in the market. This is the volume. You can see that these are the net inflows, and it's clear there's demand for Bitcoin through these ETFs. MicroStrategy, which if you guys are unfamiliar with, it's just it's a low quality software company that essentially raises a lot of capital through convertible notes to buy Bitcoin. So you can think of it as like shorting the US dollar and longing Bitcoin. This is a lot of demand from MicroStrategy. So MicroStrategy plus the ETFs, paired with the fact there's the halving event, which is a supply shock, that all is essentially a bullish thing for Bitcoin price. So how can we get Bitcoin exposure? We can buy it straight off crypto exchanges like Binance. I'm not really a fan of buying on these exchanges just because exchanges, they go bankrupt and stuff all the time. They're not that well regulated. Like FTX, user funds were lost. In addition to that, we have our tax advantages in certain accounts, right? Which we can't get on these crypto accounts. The good thing about these crypto accounts versus the ETFs or getting them on the stock market is essentially you can buy and sell 24/7. Whereas, you'd be stuck in an ETF on the weekend. But I don't think a couple days matter too much. I much prefer the tax advantages. So I don't really recommend buying on a crypto exchange. So this is an ETF I'd recommend if you just want direct exposure to Bitcoin. Why I recommend this is essentially because there's no fees until March 31st of next year, which is always good when you're going for an ETF, low fees. In this case, it's going to be no fees. So that's pretty wonderful. If you guys want to leverage up on Bitcoin, you guys can go for BitX. This is a 2x Bitcoin daily leverage. I don't recommend it because if you guys know about daily leverage, one of the enemies of daily leverage is volatility. And with Bitcoin being so volatile, you're going to see a lot of volatility drag that's going to eat away at those returns unless it's a pretty linear up. Now, we can also get exposure through mining companies. So this is Marathon, the ticker is MARA, and it's honestly a pretty horrible way to get exposure in my opinion. Why I'm bringing up this is just because a lot of you guys might think Bitcoin miners will rise with Bitcoin, and in short term it may happen, but even recently it hasn't. But in long term, these miners dilute like crazy. So I really wouldn't recommend it. Like with Bitcoin miners, you got some Bitcoin on the balance sheet, but if you look at Marathon, for example, you see the outstanding shares skyrocketing. And this dilution is just bad for shareholders. So, you can try to go with it short term. And if Bitcoin rallies really well, you can also catch a good rise. But long term, it's a pretty terrible hold in my opinion. And if you guys understand about Bitcoin hash rate, With increasing difficulty, these guys need to keep getting better and better mining rigs and all that such stuff. And it's essentially extremely unprofitable because they're constantly diluting to get these better technologies and such. And the halving puts more pressure because block rewards are going to be half. So essentially, not the best way to get exposure. CleanSpark, another miner. This one has less Bitcoin holdings than Marathon, but if you do really want to get a Bitcoin mining company, I think CleanSpark is one of the better ones. Marathon's really big, but CleanSpark has a pretty low Bitcoin break-even price. So if you're going to go with something, probably go with CleanSpark. Now, I want to talk about MicroStrategy here, and it's probably my favorite way to gain access to Bitcoin. I want to mention first that this company trades at a massive premium to its assets. So we can see that it has Bitcoin assets of about 15 billion, and yet its market cap is about 28 billion. So even excluding its debt, it trades at nearly a 100% premium. And it does have a software business, but its software business is essentially worthless. So why does it trade at a premium? And why is it still a good long? There's no amazing answer to these questions. The CEO of MicroStrategy said that he believes that the premium's partially because some institutions can only gain Bitcoin exposure through MicroStrategy. People think that you can go for kind of a pair trade for an arbitrage opportunity where you're essentially long Bitcoin and short MicroStrategy for the premium to close. I wouldn't recommend this at all. It's extremely risky because if MicroStrategy keeps rising in a bull market, you're going to be losing like double on your MicroStrategy long than your Bitcoin long is making. Or sorry, you're going to be losing about double on your MicroStrategy short than your Bitcoin long is making. So it's honestly not trying to work. It's not worth trying to do a pair trade to see if you can gain money from an arbitrage opportunity. MicroStrategy has a lot of short interest, so I would assume most of these people are trying to do a pair trade. Like I mentioned, it's had a premium for quite a while. In a bear market, it'll probably close, but Bitcoin's bullish right now. There's no point in trying to fight the trend and look for this premium to close. I'd rather just join the trend. One thing about MicroStrategy that's pretty important is that its market cap has surpassed the requirements for the S&P 500. So this is not all that it needs to pass to be included. It needs to be profitable over a certain amount of quarters, and it's been profitable in the most recent quarter as well as some of the last 4 quarters. So as long as it stays profitable for the next few quarters, there's a decent chance it gets added to the S&P 500, which might be actually the reason it's trading at a premium. And this is extremely bullish for MicroStrategy. And the reason is because MicroStrategy dilutes to buy Bitcoin. When it's in the S&P 500, there's going to be forced participants that buy when it dilutes, to the tune of roughly half of their dilution. So they only need to find real price-sensitive buyers for half of what they dilute. This is wonderful because they're not going to affect themselves too much when they do dilution after the S&P 500. They buy Bitcoin. Bitcoin's a scarce asset. It pushes the price of Bitcoin up. Their share price goes up to whatever the tune of their premium is probably. And they dilute once again and repeat the cycle. Now, obviously, a company can't just keep doing this and keep doing this forever. They need to be strategic. And if something goes wrong, there could be huge issues, especially in regards to regulation. But I feel like because MicroStrategy had a premium, and this premium is likely to stay, it's a great way to get exposure into Bitcoin without needing to worry about ETF expense ratios and getting more return for your money. So that's essentially all for this video.